Hi everyone. I hope you've had a fantastic day's trading, and you won't ever hear me telling people what not to do normally, but I'm going to just tell you what not to do in trading, to do it professionally and to avoid major calamities occurring. Today has been a massive down day so far in the markets, and everything may have seemed easy to people day trading. However, things may seem easy and may seem obvious at the time, and then all of a sudden, from nowhere seemingly, the market turns. And so you can't necessarily just by looking at price bars see it coming. But if you've experienced it in the past, then you know it's a possibility. And on big up days and big down days, you really think you should be making money. And honestly, you should, because there were plenty of opportunities for short trades. I don't think there were any long trades, but for short trades, certainly there were plenty of opportunities. And it's just a question of waiting for the opportunity to come along and line up with your strategy. And so the things not to do on a big trend day are coming up on the description of the charts that I'm going to explain to you in just a second. So here is the chart from the Dow, and it's covering the period of the open on Thursday the 13th of November and right the way through to around about midday UK time, so 8 in the morning US time. And that's on Friday. So Friday started here. And when you come into the charts and you look at this, the first thing probably that comes to mind is it's just been going down. So it's probably going to continue to go down. So all I have to do is wait for an opportunity for it to go down. And that might be an obvious thing to think. And then what happens is the market goes down. Market goes down until it doesn't. And here we even had a lower low and then a higher high. After that lower high there, you get a higher high. And what people tend to do is just think, especially when, the open of the US markets came here, and this is the 1 minute chart, by the way. The open came here and there was a fantastic 1 minute trade, which was 100 points long in 1 minute there, and it fitted my system and what I've been telling you absolutely perfectly. Little wick at the top and then it went down, followed by a move back to the ATMA, a small wick, and then down again. So two fantastic trades worth a combined 200 points if one was to take them. Now that might have occurred too soon for some people, and this is what happens, is you look at it and you think this should be easy. It's just going down. Every time it gets to the 8 EMA or the 20 EMA, I'll just go short. But you have to wait for all the signals and you have to follow all aspects of a strategy. Otherwise you get trapped. And I think what can happen is that price gets, you see candlesticks like this and you just think, well, I'll just go short. because if I'd have gone short anywhere in here, I'd have made money eventually. And that's not how to trade. And that's the first no. So you have to have the right signals, and even in a market where price is going down all the time, if you went short here at the bottom of this candle, you'd have been in trouble. And this can be the worst thing to look at, really, is that actually you would have only been in trouble for a minute and then you'd have been in profit. But that's not the way to trade. You've got to have a specific system, and if you think like that, you'd have been going short here, and then whoosh, price starts going up, same again there, and then all of a sudden you've got big moves upwards. And people will have gone short down here and stuck with it through all of this, and be stuck with thousands of dollars or pounds of debt right now. When is the time to get out? The time to get out is when your trade doesn't work out. And if you go short here and price starts going up, then immediately you have to get out. So if you went short down here and you had a stop in mind that was, I don't know, here, then that's too far away for me. But anyway, then you've got to get out here. So you get out at this stage here. You've got to do this. You've got to do this, even though it may seem that a downtrend or an uptrend is eternal. It certainly isn't. The other thing that people have the inclination to do sometimes is add to their trades. So if you went short here, let's say here, and price started going up, then you go short again, and then it goes up and it goes down, and you nearly break even, and then it goes right up here, and you're in all sorts of trouble at this stage. So you've got to stick to a stop, and my stops are tiny, and so I lose almost nothing compared to what I gain from my winning trades. That's the way to trade. I did actually take that was, believe it or not. So I've already described this move on the open, but there was also a fantastic trade on the 5-minute chart, which absolutely fitted everything in terms of criteria that I've been talking about. Price went back up to the ATMA and produced a tiny little wick. I went short when the next candlestick went red, and stayed in for the whole of that particular candlestick. You can see that because price is moving so quickly at this stage in such big chunks, that I'm already in good profit at this stage. And here is how that finished. So I was in here and it finished down here. So probably where there, something like that, it finished. It had all the criteria for a good trade, and that's what I'm encouraging you to do. Stick to the system. Don't think, I've done it myself, don't think that you know better than the market. The market dictates my system, and I follow it diligently. And you should follow a system diligently. Don't make things up as you go along. So no there. Don't make things up as you go along. Follow the system, and I believe you'll do well. So the other thing that people can tend to do is they can tend to, think, oh, that trade didn't work out, so I'll go long. And on certain occasions, that works out. But then you think, but I didn't stick to my system. Price has to go long, price would have to be above the 8 EMA. So maybe there, maybe, here, after a big green candlestick, it's valid, but all day long it wasn't valid. And I'll guarantee you there are people who've done both of those things. So gone short down here with no reason to go short, lost money, and people who've reversed their trades, gone long, maybe here, and then all of a sudden price starts going back down. And both of those are losing strategies, and you shouldn't do them. Even on days like this, the world can come to an end in terms of trading for you if you don't respect the market. And adding to losing trades and reversing trades are losing strategies, and it's not respecting the market. So, take signals that are signals that people have taught to you and validated that are good signals, like this one here, tiny wick, price goes down, huge. Tiny wick, price goes down, enormous. Same again here, price crosses through the river of value, pokes up and then goes red. Great trade. All of these are great trades, but random trading, it doesn't work. And so I'm hoping that this is going to ensure that you never do something like that, because it's stupid. No, it is stupid now because you've been told. It might not have seemed stupid before, but you've been told, so that's stupid. Don't take offence, please, because I've done both of these things and they just don't work. I used to test the market, and it needs respecting. It taught me that many, many times, and I'm here to teach you the right way to trade. And so respect the market. Okay, there's the end of the no-nos, and I'm just going to say this is what to do from now on in. Okay, cheers for listening. My name's Anthony Beardsall from the Excellence Assured Trading Academy, teaching you the right way to trade. Cheers for now. Bye.